Are you ready to trade with zero risk? This video reveals a Tradingview indicator that can change the game. Say goodbye to risky trades and hello to profitable ones. With its unique approach to analyzing market trends, this indicator can identify profitable trades without any risk involved. If you want to receive automatic updates on this Tradingview strategy, then take a look at my Telegram channel where I automatically tell you when you can open a buy or sell position based on this indicator. Now let's get started quickly. Strategy settings. The cryptocurrency market has proven to be very receptive to this strategy. 3 indicators are required to set up our scalping strategy, and it works best on the 1, 3, 5, and 15-minute timeframes. Let's start with the first indicator called Zones Detector by Kalati, which is primarily used to identify supply and demand zones in the market, although it is not necessary for our strategy. After going to the indicator settings and disabling zones in the style section, we can proceed to the next step. The buy and sell signals generated by this indicator are very different from those of conventional indicators such as super trend or channel exit, which alternate their signals. With conventional indicators, you have to wait for a new signal to appear, which may not appear until the trend is over, but this indicator can give many buys or sell signals in succession, which can increase the number of profitable trades. The second indicator we need is called the Mean Reversion Channel by Faryad Zulkifli. Strong and weak overbought and oversold levels are the main ones that show this indicator and are useful for determining and including a channel, a major pivot line, as well as support and resistance lines. However, we will need to make some small changes to the settings by accessing the inputs and changing the external channel size multiplier from 2.415 to 2, as well as hiding certain lines in the style section. When the price reaches or approaches the upper boundary of the channel, it means the market is overbought, which prompts traders to sell, leading to a price drop. Conversely, when the price reaches the lower boundary of the channel, it means the market is oversold. However, in a market with a strong trend, the price reversal due to traders closing their positions is not so strong. Therefore, in a strong uptrend, the price often continues to move in the same direction after a pullback, as the pressure from sellers is not significant enough to completely reverse the market. Retail traders who go against the prevailing sentiment, assuming that the market is overbought or oversold, often have no chance of making a profit. Retail traders who assume the market is overbought or oversold often confuse themselves when their stop losses are triggered due to a simple price reversal. So our third indicator, which we still have not added that will help us with this, is the Smooth Moving Average. Don't forget to add this final piece to the setup, with a length of 200, and you'll be good to go. And now you can see that SMA shows us an uptrend, so we will not open any sell positions and our stop losses don't trigger. The Smooth Moving Average compares the weight of recent prices with prices in the past. This makes it an ideal tool for determining the overall market trend. When the price closes above the SMA, it signals an uptrend and traders should only consider buy trades. Conversely, when the price closes below the SMA, it indicates a downtrend, and traders should only consider sell positions. Rules for a buy position. To find entries using these indicators, it is important to follow such conditions. Here is one for a buy signal. First, ensure that both the price and the channel are above the SMA. Second, wait for the price to pull back into the lower channel. Once the price has been pulled back, check if the indicator prints a signal to buy. If it does, this is the final confirmation to open a buy trade. Set the stop loss below the recent swing low and target 2 times the risk. Once you have made a quarter of the profit, move the stop loss to the break-even price. For instance, if you risk 2% of your account balance per trade to profit 4, move the stop loss once you have made 1% profit or use it to secure the trade. It reduces risk but always keeps the focus on the chart, so I do it not always. I can understand that you don't have all day to analyze prices before opening good positions. That's why I designed a trading bot that automatically gives an alert 24 hours a day when you can open a buy or sell position based on this strategy. Through these alerts you will save a huge amount of time and only trade at the right times and start earning the maximum. Press the link below this video for more information. Rules for a selling position. To find a sell signal, the same conditions must be met but from the opposite. Firstly, both the price and the mean reversion channel must fall below the SMA. Secondly, the price should approach the oversold region of the channel, and lastly, the indicator should issue a sell signal. Place the stop loss above the recent swing high and aim for twice the risk as your target profit. If you want to secure the trade even more, you can move the stop loss to break even or exit the position once you've made a quarter of the profit. Entry conditions. Due to the special requirements for entering the strategy, it is understandable that there will be few valid signals. However, if you want to increase the number of signals, you can make some adjustments. First, you can strengthen the middle reversal channel by reducing the multiplier from 2 to 1.5. In addition, you can change the SMA time interval, which will affect the number of generated signals. For example, if you are using a 3-minute chart, you can set the SMA timeframe to 15 minutes and observe an increase in the number of signals. It's important to note that these adjustments will likely decrease the precision of the signals. However, you can compensate for this by incorporating a volume or another confirmation indicator into your analysis. Backtesting. In order to consolidate the basic principles of trading according to our strategy, let's do a small backtest and analyze the results. Now you can see how I consistently look for entry conditions and check the success of opening a position if all the conditions are met. I will try not to take up much of your time and speed up this process. Looking ahead, in just 10 minutes I found 10 optimal conditions for opening a trading position on the chart. 7 of them were successful, and given that we made changes that increased the number of entry conditions but decreased the quality of such signals, this is still a very good indicator and proves once again that the strategy is successful. Summary. The strategy that we have learned today is designed to avoid false entries into unsuccessful trades when a strong uptrend continues in the same direction after a pullback. It means that the pressure from sellers is not significant enough to completely reverse the market, and retailers who go against the prevailing sentiment, assuming that the market is overbought or oversold, often have no chance of making a profit. We have seen that the strategy has a high level of successful trades. Despite its simplicity, it performs its main function very effectively. It increases our capital. So, don't waste your time, test this strategy and see for yourself. I hope you enjoyed the video. If you did, please leave a like and subscribe to the channel. You won't miss out on my future videos about other trading strategies. Thanks for your attention.